the pandemic is still ongoing. But how has it really affected the real estate market here in Dauphin County in central Pennsylvania? Stay tuned. I'll let you know. So here in central Pennsylvania, which is the Dauphin, Harrisburg to Carlisle metro area, our housing market actually was starting to move more towards a seller's market prior to the pandemic. We had a lot of buyers that are on the market and not a lot of homes. You know, it's the basic principle: supply and demand. A little bit of supply, high demand. So we started to see a little bit of a shift prior to COVID, and then the world shut down. How has the market changed since then? Well, we are now in an extreme seller's market. Like right now, I think we have about a 5 week supply of homes on the market right now, which means if no one else lists their home right now, we will sell out of homes to sell within 5 weeks. Like that's insane. And it may be a little bit less than that right now. So what all happened? Well, you have people who the interest rate just dropped. So now it's so cheap to borrow money that you have a lot of buyers that are on the market right now. And also at some point, the government was just making it rain on everybody. If you had a legitimate business, you SBA grants and all types, the federal government was just handing out money like it was nobody's business. So what a lot of people was doing with that money is they were even banking it, or they were saving it so that they can go ahead and move into a new home, which was fantastic. And for those that, for those that suffered financially, this, no offense, right? So, but there was a lot of people that was able to hey, mortgage companies are, doing forbearances where they're tacking on or creating a second loan, allowing for people not to pay their mortgage. So what people were doing was like, all right, cool, I'm going to go ahead and I'm going to bank that money, or I'm going to use that money to either invest in the stock market or invest in another investment property. They were using the money that they didn't have to pay right now, even though they had it, to build wealth, which some people, they were able to do it successfully. So when it's time to go ahead and kick that back in, they were okay. So there was a lot of things that was kind of happening where people were able to put themselves in a much better position. So that has brought more buyers into the market, plus a bunch of other things. One other thing that we're actually noticing too is we are getting a lot of people that are looking to move now. So whether you're looking to move out of state to be back to your home state, or you're moving to leave your home state to come to another state where cost of living is cheaper. And the reason why that's happening is, well, a lot of these places that went from a work, come to work to you can stay your ass at home, have said you guys are still productive at home. So we're going to actually leave this so we don't have to keep our buildings. You can continue to work from home from here on out. So if you have a job where you can work from home, why would you not move to a different state or a cheaper state or a different place, because you can still keep your same job? So like I said, we're getting a lot of people that are coming from the Maryland, Virginia, New York, where prices are so high. Now they're coming to Pennsylvania, where prices are a little bit more reasonable, and being able to make money, out of state money, and do more with the money that you're making by living in a place where it costs less. So I do think that was a huge change to our real estate marketplace, where people are working from home. So with people working from home is also another instance where people are either finding out that they need a bigger space, or they got too much space. So that kind of another reason why I put people into a position where it's like, all right, we are seeing some homes that are being sold. We're still well below what we're used to several years ago as far as the number of homes that's on the market, but sales are still high. Let's talk a little bit about frustrations for buyers. I touched on it a little bit. With housing prices rising, homes going under contract in 2 to 3 days, 30,000-40,000 up above asking price, paying double transfer tax, buying a home actually has become more expensive for more people. Whereas, cash buyers, conventional, if you aren't in a position to buy a house in cash, in a lot of situations, if you're not in a position to buy the house in cash or conventional with a whole lot of money down, you were finding a lot of people are getting frustrated because they were losing when they were competing. Once again, it's starting to lift up a little bit. FHA has always been one of our more popular loan types across the nation. But now that's starting to give to conventional, because sellers are under the impression that conventional loans are always better than any kind of government-backed loans. Whether you are VA, USDA, or FHA, you were kind of losing out, and it was causing some frustration for a lot of buyers who just stepped out of the market. So that was kind of a huge thing. But once again, was that COVID related, or was that more so because of we are in an extreme seller's market? In my opinion, is because we're in an extreme seller's market. As I start to shift, as more and more properties hit the market, as some of those buyers kind of step back and is not competing as hard, we are hoping that we're going to get to a point where it's like, it's not just, one house, you got 30 offers all within the first 30 minutes, right? So some neighborhoods, even in central Pennsylvania, some neighborhoods are still like that, where there's still a bunch of offers. So, depending on what price point you are and what you're looking for, so is everybody else. So a lot of buyers are getting really, really frustrated. Once again, things are starting to lighten up a little bit. So if you're looking at earlier in the year and thinking about doing it now might be a good time, especially as we get into the fall and the winter, when you're going to be competing with less people. Granted, there's less houses, but you're going to be competing with less people, and you have a better chance at winning in an offer without feeling as though you have to overpay. Another fear is that a lot of people feel as though the bubble's going to burst. This bubble is a lot different than the last one. The last crisis was kind of created by unscrupulous lenders. People just giving loans to just anybody and everybody. It's like, oh, you said that you made $100,000, but you work at McDonald's, and something, without no docs. That bubble is not going to happen. This bubble is created by supply and demand. And at the end of the day, as long as things stay neutral and we don't go from an extreme seller's market to extreme buyer's market, prices should remain pretty much the same. So if you buy a house at one price this year, chances are you're going to be able to, the price is not going to decline over the next 3, 4, 5 years. But what we always say is, like, no matter what your situation is, no matter what kind of market is, you will be fine if you're a home buyer, as long as you actually don't have to sell your home within the first 5 years. If you do, then you may have to come to the table with some money, especially if you're using like a USDA, which is 100% financing, if you're using FHA, which is 96.5% financing. If you don't have a big down payment, if you need to sell within a short period of time, you may be in a pretty tough situation. But as far as the real estate bubble bursting, we're not expecting that to happen, because this real estate bubble was actually created by supply and demand. Speaking of supply and demand, another thing that actually has changed since COVID is the cost of materials. We all heard it. We all hear it all the time. Cargo containers stuck, and the price of lumber and windows, and the delay in getting things over here. That is one of the things that kind of happen, and it trickles down. It could be because there's a lack of drivers, there's a lack of people that actually want to work at, those stockyards. So with employment being where it is, and supply chain issues, and not having enough drivers, not having people wanting to work, these are all kind of creating things where it's driving up the prices of materials. Driving up the prices of materials is driving up the cost and how much it's going to cost, especially for things like new construction. So those are some of the negative effects of COVID and what has happened and what's currently going on, where prices are going to continue to creep up as long as we have supply chain issues when it comes to the materials for new construction. Another way that the market has changed, real estate market has changed, is the economic growth, right? So when homes are worth so much more now, you are creating a big gap of equity. I think they were saying that it was in central Pennsylvania, it was up like almost 30% in certain sections. Not every area, I'm not going to say broadly. There's certain sections where the value increase has went up. Refinances became very, very big, because when people had like 4.5%, 5%, 5.5% interest rates, when they dropped down to like 3%, it was a perfect time to refinance. So we're seeing a lot of people that are gaining kind of equity just by being a homeowner in today's market, and then with COVID at the same time. So, there's tremendous opportunities in real estate right now. So it has changed. A lot of it was, kind of happening before COVID, then COVID hit, and was kind of like a perfect storm of awesomeness if you're an owner. you freak out a little bit if you're a buyer, but if you are a strong financial position, it was definitely a great time, and you're still seeing that appreciation there too. So not everything was peachy, right? So one of the things that we actually have to think about, or that I think about when it comes to like how the real estate industry has changed, is a lot of sellers are a little bit hesitant on how to do they really want to sell their home when there's a pandemic and have people walking through their homes. Well, people tend to adapt, and they adapt very well. So one thing that I see change was the technology that we use. It didn't change. It's just that people started implementing it more. We were always very big on videos and 3D virtual tours and things of that nature, virtual showings and things of that nature. That's something that we've always prided ourselves on, as being up above the curve when it comes to technology. But it was to a point during the pandemic where once we were kind of allowed to go back out, where people were still just doing virtual tours. They'll just FaceTime and Zoom and just kind of creating that virtual reality, that virtual showing. There are some pros and cons to that, and that actually may be a separate video. Some of the pros were, it's like, cool, like people couldn't really get out, but they can go ahead and view a home, they can tour a home. The cons were, well, you can't really touch. You don't know what the cabinets feel like, with the countertops, how the carpet feels on the hardwood floors, smells. Those are things that you can't see through a video. But if you can figure that out, you can make a whole lot of money in that. So those are some of the things. Those are some of the pros and cons that we actually seen with using technology and virtual showings. And at one point in the year, even houses were showing sight unseen without people actually physically going into a house, where sellers were just kind of lining up, doing virtual tours and doing FaceTime showings of homes. So yeah, it made us as real estate agents start to look at how we're leveraging technology, and still be able to help our clients. Most of your contract signings and things of that nature were already done online. So it's just a matter of like implementing that. So those are some of the things, some more of the things that have changed since COVID. Will we go back to always wanting to go in? Yeah, absolutely. It's something that we suggest. And, for us, just looking at how quickly homes are selling and price above, asking price and waiving inspections and things of that nature, that's probably going to be due more to us being in a super seller's market, and we're starting to come out of it just a little bit. It's not going to be like, oh my gosh, it's a neutral market, it's a buyer's market anytime soon, but it is maybe not as aggressive. So those are some of the things in how real estate has changed. Yeah, so that's going to be it, this video. Thanks for watching. Please like, comment, subscribe. If you have any questions whatsoever, or is there a particular topic that you want me to do a video on, please make sure that you leave something in the comments. That way we'll know. All right, talk to you soon. Have a great one.